Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, and I am your host here to crush it with you on all of the action. And we have some interesting stuff today. CPI data just hit. We're going to take a look at it here and see exactly what it's telling us. So follow me over here. No delays. Get right into the nitty-gritty action. So first off, guys, CPI and core CPI numbers released today. Now, the first thing to note, check this out, guys. This is actually very interesting. CPI core month over month came in at expectations of 0.3% increase. That's the forecast number, and that's also what was last month. So no change there. The market expected that. The next number, this is the kicker here, guys. The core CPI year over year last was 4%. Expectations were 3.8%. We came in at 3.9%. That is a hotter number than expected. Next, CPI, just regular CPI month over month. Last was 0.1. Forecast was 0.2. So forecasting an increase, we came in at 0.3, a double beat on inflation, meaning inflation higher than expected. Again, plus 0.1 from forecast, but actually plus 0.2 from last month. The next one, core CPI year over year. Expectations 3.2%. It came in at 3.4%. So again, what does this tell us? Inflation is not magically disappearing. It's not. I've warned about this. I've said inflation is going to get sticky around 3%, and it certainly looks like it's starting to do that. These numbers, there is no doubt, and the market, we're going to go into the charts in just a second, the market is confirming that these were a surprise higher inflation numbers than expectations. Lastly, initial claims. Last week was 202, expectations 210, so a small increase in jobless claims, people filing for unemployment. What did it come in at? 202,000. So again, inflation is higher, but the jobs market is staying stronger, which is inflationary as well. So to summarize again, inflation is hotter than expected in the latest CPI data. Now, interestingly enough, check this out, guys, right? So if we just flip over here, and I want to just go to one other little thing on the screen here, is that if we go to just what was said yesterday by Fed President Williams, all right, and again, the graphic I thought was appropriate with all the dollars and bills flying in the air. But basically yesterday, and the market ignored this. This was really, this just shows you how emotional markets are. They believe things that they want to believe, and they'll throw away things that they don't want to believe in the near term until reality hits. But yesterday, Fed President Williams said, I expect that we will need to maintain a restrictive stance of a policy for some time to fully achieve our goals, and it will only be appropriate to dial back the degree of policy restraint when we are confident that inflation is moving towards a 2% level on a sustained basis. So again, it's almost like, and I would say this, guys, he probably knew the numbers yesterday. The markets generally ignored it. They were up yesterday. We've been up multiple days in a row. The tech sector, the tech stocks, the mega caps have been crushing it. Nvidia's been crushing it. But again, Fed President Williams giving us a heads up yesterday that something was not right. Okay, quickly, here is the 10-year yield on an intraday basis. This is the 10-minute chart, so each one of these is 10 minutes. Look at the move of interest rates to the upside. That is a huge move, guys. Again, basically from 3.98 to 4.066%. In interest rate land, that is a big move. Again, what do the markets do? When interest rates go up, what do we expect from the S&P? Take a look at this drop. So this is where we were trading going into the numbers pre-market on the S&P or the spiders. Look at the drop that we saw. Now, listen, we were up nicely on the markets going into these numbers this morning. The market, again, was euphoric following multiple good news days. And here we are giving back those gains from just this morning pre-market, and we're only slightly negative. So I want to be clear on this. It's not like markets are collapsing. The mentality of the market right now is jovial. It's jubilant. It's we're going to be fine no matter what. Sure, this data so far is causing a little sell in the S&P, but it certainly isn't a big sell yet. And I think that's important to put in perspective, right? You have to look at what the reality of the situation is. And just to do that, let's flip over to the daily chart. Here's your daily chart. Where are we currently trading on the daily chart here? Here was yesterday's green candle. We're like right here, just down ever so slightly. We're still net positive from yesterday. Maybe that changes throughout the course of the day, but I think, again, the spot Bitcoin ETF being approved, it's risk on in this market. There's no doubt about it. So even when you get hotter than expected inflation news, the market, at least for now, is kind of saying, okay, hotter, but we're not buying it. We still want to buy stocks. We still want to buy crypto. We still want to have fun, and we think we're going to make money. That will change at some point, at least not now as of today. All right, couple other things I want to show you. One of the reasons why I continue to be convinced that inflation is not going back to 2% anytime soon, and why the Fed is going to have a hard time cutting rates substantially, is if we bring up the M2 money supply chart. So M2, we know what M2 is. It's basically all of the money in the system. Here you have a longer term trend from where M2 was all the way back here. And basically M2 was going sideways to slightly higher. Once you got to the 90s, it began to increase. Once you got to 07, 08, it's gone vertical, right? Look at this increase. So you have all this money floating in the system, right? And again, look at what it's done since the Fed began to tighten. Look at that. I mean, can you guys, you could barely see that. It's so small in comparison to this rise since basically the financial crisis, or even the 2000s, since the dot-com bubble collapsed. All right, and my point again is that if you have this much money in the system, and I mean, literally, I talked about it yesterday. NVIDIA alone, before yesterday's gains, had created $130 billion in new money just from going up for 6 days in a row. We know what Microsoft, by the way, pre-market, I don't know where it is now, but pre-market, it was a new all-time high. That's basically a $3 trillion company right there. So you have so much money in the system, and sure, the Fed's tightened a little bit, but I mean, again, is this going to really remove that much money from the system that we're not necessarily going to continue to see inflationary pressures? I would argue no. And that's why, again, I think you're still going to get stuck in this 3% inflation range. Now, is it possible that we get in such a big recession where the Fed will say, okay, the new normal is 3%, we still have to, print a little bit of money? Sure. I do think eventually that happens, where later this year, early 2025, we are in a recession. It starts to get worse. The Fed starts to cut interest rates anyways. But the problem is, as soon as you cut interest rates, when you're starting at a baseline of 3%, you're going to put additional pressure from 3% in inflation to the upside, right? You're creating easier borrowing. More people will borrow. More money goes into the system. M2 money supply, you know what's going to happen? It's going to go like that. It's going to start turning back up as that occurs. More money going into the system, right? So prior to this period where we were in, right, if you go back 2 years, inflation was very, very low, maybe 1.5%, 2%. So when the Fed did what they did, we saw inflation going from, let's call it 1.5% to basically it topped out at 8-9%, whatever you want to say. And again, you can argue if these are real inflation numbers. I honestly think to the average American, inflation's a lot higher, right? Because the average people are spending a lot more money on food and energy and housing, which were the major culprits, versus what they actually calculate in the inflation numbers. But regardless, we'll just use these numbers for the sake of use. If you start at 3%, right, so you're double here, where do we go when they start printing money again? If they go all in and print money again, you're talking like 16% inflation, maybe upwards of 20%. So that's going to be very problematic for the ability of the Fed to bail us out of a recession in the future fully like they have in the past. All right, couple other things. If we go to the QQQ, The NASDAQ 100, here's your intraday drop on that CPI data. We obviously have seen a little bit of a chop. To be honest, we're still seeing stocks in the tech sector being strong. NVIDIA barely budged on this. I mean, literally, it was up $5-6 going into this news. It's still up about 4, 5, 6 right now after this data. So again, there's this insatiable quest or thirst for these companies right now, and it doesn't seem to be affected at this point at these levels. Now, if we do flip over to NVIDIA, right, we can see it came down just a little bit, but this is where it closed yesterday, right? So you closed NVIDIA right here yesterday, right here, and this is where we currently are. So you're still doing very well on NVIDIA pre-market, even though the NASDAQ is essentially flat and the S&P is slightly negative on the charts. And again, that is a robust move. Now, the one thing I'm watching today on NVIDIA is this chart right here. All right, this is your monthly chart. And again, you could break it down into a weekly or daily, but I think it shows us the chart the best, which is continuing to show us that you have your pivot high from 2021 right here. That's where we corrected from $350 all the way back down to about $100. If you take that high and you connect it to this high here, you get a trend line that we're now at that level up here. And so I'm curious to see in the coming days, do we push through this level of resistance or does it actually start to stall? And we'll see today. I mean, maybe NVIDIA ends negative on the day. Maybe finally at this $550 level, being a pseudo-even number, we start to see some profit taking. I don't know, honestly. We're going to be watching it very closely. One thing I do want to mention to you guys is that at some point, you go back to the scene of the crime. Here was a correction. The scene of the crime is down here, right? This is the breakout level. So here was your breakout line right here. You broke out here and you went up and you pulled back, but you never pulled back to the scene of the crime. At some point, whether it's this year or next year, I do think NVIDIA comes back and finally tests that level. It's just the nature of charts to do that. All right, couple other charts that I want to touch base on today, guys, as we continue through. This is your Meta chart. Meta had a great day. Look at the vertical move. I still remember, guys, in themoneystocks.com, verified investing alerts, where I put out my trades and my trade signals. We had this monster move. If you guys remember in 2022, it was all about Zuckerberg spending all this money on the metaverse. Oh my goodness, this is going to kill Facebook and da-da-da. And we saw this collapse all the way down sub 100 on Meta. And basically at these levels, I still remember being long around $110. And I was down about $20 on the trade. So I was down about, just under 20% on the trade. And people were like freaking out, like, oh my goodness. And I'm like, dude, like, again, this is not a small company. And again, as it rallied up, we made really good money on it. We made 10, 20%. I don't remember the exact amount, but it's just crazy to look back and say, wow, so I was in right around here, and look at how big of a run it made. And it's still going. Let's be fair. Now, on a technical basis, where is this going? Where's the logical technical place that this is going to go? This would be where you say, okay, double top is your resistance line. If we put a trend line in there, right around 385 is where this is likely going. We can see it right up here. And that means we're getting 385. We're only about $15 away from this. And again, it could pierce, just like the NASDAQ has pierced the all-time highs. You could pierce by a little bit, maybe touch 400. But at some point, this vertical move, if you look at the RSI on the monthly, it's pretty darn extended at this point, and it is due for a bigger corrective move as well. But again, what this shows you is the momentum, right? So when we were up here, maybe going back, and this is just educational, we probably should never have been up here at that time. But then same thing down here, price was being ruled by fear. So greed at the extremes, fear at the lows. Where is kind of your equal area? Probably somewhere in the middle in here. Now we're getting into the greed zone again of moving up. And my guess is when you get a pullback, I'll have to figure out exactly where I think it'll go, but you'll probably pull back at some point to kind of that middle ground. Remember, the markets work like a pendulum. Greed takes control and swings the pendulum one way. Then fear comes in, it swings it back. Where is equilibrium? Right dead in the middle somewhere. Somewhere in the middle there is where price usually settles or should settle until new information comes out that changes valuations. All right, so that's just a few little tidbits on the charts at this point, guys. Again, looking at the 10-year yield, we are seeing the 10-year yield come down just a tidbit here, so just a little bit. If we go to our daily chart on the 10-year yield off of this news, we continue to see that we are stuck through these kind of these pincers, if you will, like this. And again, we'll have to watch to see, do we break to the upside or do we come back down and test to the downside? Yields, again, with a small bounce net today. We'll see if it continues and what the markets ultimately do. Lastly, the U.S. dollar, guys. The U.S. dollar still has a bullish pattern. We are upticking a little bit today, but again, that's a bullish pattern right there. Remember, bull flags are right angles. That's what you're looking for. That's a perfect bull flag. We call an in spirit of flag pattern about a 45-degree angle or up to a 45. So anywhere between 90 to 45, that's your zone for a good pattern. A lot of people will look at a chart, by the way, and say, oh, up, and look at that. That's an inside bar move. It's not a very good pattern formation. And the reason it isn't, when you get too steep, when it's less than 45-degree angle to the downside, the problem that you arrive or that arises is that when you get your bounce, oftentimes you go like that. And you might say, okay, well, that's okay. Price is starting to go back up. The problem here is that what type of pattern is this now creating? That's a bear flag, right? So that's when retraces are too steep, it's usually not as good as when they're at 45 to 90-degree angles. Little tidbit for the day. All right, back to center screen, guys. Let's go. What we have here, guys, is I Trust Capital, which, again, with the Bitcoin spot ETF approved and all that stuff, you guys got to check these guys out. They are amazing. They're a sponsor here, and I do thank them for keeping me able to bring all this information to you guys, so take it away.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, back we are, here we are. So a couple things to go over. Number one, we have Bitcoin pushing up again a little bit today. The spot ETF was approved, much less fanfare than the initial fake out the prior day. But here we are. We're continuing to hover relatively well. Interestingly enough, we didn't get much volatility on the actual announcement. I think everyone kind of was exhausted from the previous day, saw that overall price didn't do a whole lot. It popped up, sold a little bit, and then here we are today. But the one thing I will say, Bitcoin is beginning to test this 48,000 level. We're almost back to 48,000. I'm still in the camp that we'll go to 48 to 50. Okay, 48 to 50 is my zone. Now, again, we know that the 618 is just a little bit higher, around 48, high 48s. We also know that we have major trend lines right around 48 to 50,000. So that's going to be the big level to watch here. One of the reasons why I think the Bitcoin chart or Bitcoin action today is somewhat on the strong side is because everyone is waiting for these ETFs to launch, right, to begin trading. And so I think you're getting hype going into it, which is pushing Bitcoin up in a short term. Now, when these things debut, if there's not a lot of price action and price doesn't spike up on that, that's where I think you could see a little bit of a sell-off come in. So again, it's kind of like the last thing we see. It's like I think there's a lot of people that are waiting for these ETFs, and maybe rightly so, to see how much interest, how much money floods into these things so they pop. Do they pop on that? And if that happens, then that's a good thing, right? I'm still hoping we get about 50,000 out of this to really tag that upper level, but that's what I'm looking at this point in time. Still thinking, again, I'm still in the camp that whether we touch 50, pierce 50, or don't even get to 50, at some point we are going to retrace to the downside on the charts. Ethereum, we talked about yesterday. I was talking about how this makes sense as a potential runner. And again, Ethereum in the overnight continued to push up. You can see here, there is a big level at $2,700. That to me is where this thing is going. We've gotten very close at this point. Today's high right now, I'm seeing it around 2630. That's a 10. No, that's right. 2633, give or take a little bit. 2666. I apologize. 2666. So we came within about $35 of that $2,700 level. But again, right now, this is now the news story that everyone's starting to talk about, the new narrative, as we call it, which is, again, Ethereum ETF. Maybe this gets approved by the summer. We'll have to see. But again, there's no decision earlier than the summer at this point. That's the earliest point that I'm hearing that this will be on the docket for decision of an ETF. All right, natural gas, guys. Natural gas, if we flip to the daily chart, again, that great reversal back down here. We had the big pop at the 618. It reversed. Today, we're trading slightly lower. Again, would I be a buyer on a pullback? The answer is yes. It just has to go back to a certain level. To me, I'd like to see a 618 Fibonacci retrace somewhere in that vicinity from this initial move. If we do that measurement right out, the 618 would be right around 257, 260, right in that vicinity. So we get some sort of pullback in that range. I could see myself nibbling again on the long side of natural gas. Gold today, guys, if we take a look at the intraday gold, look at the volatility here that came in on the back of the CPI data. So initially we spiked up, then we spiked down, and gold right now is hovering just fractionally negative on the day, with very little action. Again, I don't have much else to say other than that we're still just hovering. If we look at this chart, we're still just hovering right below this longer-term trend line that, again, I'm waiting for an eventual breakout, and I think that, again, will come honestly, within weeks. I wouldn't be surprised if by in February, we see a breakout of the all-time highs. Oil yesterday got pummeled. It's still holding this longer-term level, though. Remember, 67-ish, give or take. We start trading below there. That's the warning zone for oil to continue to collapse. As long as we hold this trend line, it could go back up. So keep that in mind. Right now, yesterday it flushed. Today, we're actually gaining decent momentum back on it. We're having a decent little bounce on oil back up. So again, a lot of chop recently. It's still holding support. Respect support until it breaks. Let it do its thing. If it breaks, again, that's a breakdown. Right now, it's not breaking down. No matter what you feel or think, doesn't matter. Markets couldn't care less. Same thing for what I feel or think. The markets are going to do what the charts are telling us they're going to do, at least with a high probability. It's up to us to follow that. All right. Lastly, I'll touch on silver. Silver continues to be a little bit weaker here, guys. You did get a small breakdown of this upsloping trend line. Again, longer-term macro charts, if you go to your monthly or your weekly, very bullish, but shorter term, we still could get some weakness, maybe down to about $21 or so, give or take. So just keep that in mind, that there is a chance that silver could have a little bit of downside here in the near term. All right, back to center screen, guys. Again, CPI data was a hotter than expected hit. So far, markets are fractionally down, give or take. We're kind of around the flat line, give or take. The markets honestly are digesting this hotter number relatively well, right? Because if you think about it, the markets, this is something that literally will influence if the Fed can cut. If inflation stays and starts to uptick, how does the Fed cut rates, right? How do they do that? And so impressive that the markets are ignoring it for now. I'm going to watch this action. I'll update you guys later, obviously, via Twitter or via the services that I have that I do my daily analysis videos on. But as of now, markets, again, pulled back off big gains early, basically flat to negative. Let's see where things go. Thank you guys so much for tuning in today to the game plan. Again, I'll be back Friday morning, and we'll rock and roll. Have some more fun. Have a great one, guys. Take care.